ensure the balanced development of the banking company. Almost a commercial bank, cooperative bank, they need to balance everything properly. Under any banking operation or any organization, minimum employees, if they're working, of course they want to make a compulsory provident fund or pension scheme. In our nation or country, RBI is a central bank. So indirectly or indirectly, all the commercial, all the banking system are controlled or planned or regulated by RBI. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce, Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 3, Session 1, second semester, BCom Law and Practice of Banking. The chapter name, third unit, Banking Regulation Act 1949. And today my agenda, so one is the introductions for Banking Regulation Act 1949 and origin, objective of Banking Regulation Act, the main objective of a Banking Regulation Act 1949, what and all, and the banking sector reform. The last agenda is the Narasimha Committee Report 1991. And the introduction, why the Banking Regulation Act is important for banking system operation. It is very important to regulate or taking a control for the complete. So here the Banking Regulation Act 1949 Act in India is one of the legislative authority of India, because we are talking related to India, the banking system which is controlled regulated by the Regulation Act 1949. That's what it is very important. It is a single body that control the cooperative and corporation bank. Even both are financial related instruments only they are trying to do. Both are the financial institutions only. Either it is a commercial bank or a cooperative bank. Okay. So here in India, in all states, including Jammu and Kashmir, what and how many states we are identified in the India. So almost all the states, they are following the Banking Regulation Act 1949, because which is regulated and controlled by this Act, Regulation Act. The Banking Act came into power on the position of the company. Which company? Banking company. So Act some changes in the 1949. So the banking came into power on the position of the banking company. So act with some changes in some little changes, because whenever the system is operating based on some changes or situation, so whatever the possibility is there for good running, okay, so the changes is made. And the origin, which is started in the year, the Banking Regulation Act, which is introduced in the year of 1949, is a legislation in India that regulates all banking firm in India. So, which is undertaking for all commercial bank as well as cooperative bank, which is coming under the banking system. So, that's what the Regulation Act is very important. So, it came into force from March 16, 1949 and changed the Banking Regulation Act 1949 from the 1st March 1966. This date is very important. So any changes whenever the act is passing, so you must remember the act when it is passed, okay? So it is applicable including Jammu and Kashmir from 1956. But this act is established in the year of 1949, the act is passed. So here the Jammu and Kashmir, they followed this act in the year of 1956. The Banking Regulation Act 1949 is a legislation in India that regulates all banking firm in India, because the complete banking operation taken care by the Banking Regulation Authority or Banking Regulation Act, so they are trying to follow. Initially, the law was applicable only for banking company, but in the 1965 it was amended to make it applicable for cooperative bank. So only bank means we can identify the commercial bank as well as now, which is in the year of 1965, even the cooperative bank, which is a voluntary bank. There are too many types of cooperative bank we can identify: agriculture cooperative bank, fertilizer, farmer cooperative bank. So everything they are using a financial instrument, so they are expecting a money from the publics. And introduce and other changes. We identify there is some changes in the year of 1965 which is related to cooperative bank. So in the year of 2020, it was amended to bring the cooperative bank under the supervision of RBI, because in our nation, our country, RBI is a central bank. So indirectly or indirectly, all the commercial, all the banking system are controlled, are planned, are regulated by RBI. So that's what. The Act provides a framework under which commercial banking in India is supervised and regulated, because we know the major functions of RBI is a primary function and secondary function and supervisory function, even the development functions. And what objective of Banking Regulation Act 1949, the main objective is so to provide specific legislation containing comprehensive provision, particularly to the business of banking in India. So all the banking, the primary functions is an accepting a deposit from the consumers and lending loan. They are charging for the interest. They are providing a lot of facility. The customers can be individual or banking or government. The complete regulation, control or supervisor taken care. That is the main objective of this. And prevent such bank failure by prescribing a minimum capital requirement. So always the banking or maintaining it, there are two types of ratio or maintaining. One is cash reserve ratio. Individual bank, they are depositing in RBI, and one more ratio which is called statutory liquidity ratio. In the adequacy capital is always they want to maintain. In case of the capital is availability is not there, means the operation, the banking operation which is not running very smooth way. So that's what the minimum capital requirement is very compulsory. That is an objective of this act. Ensure the balanced development of the banking company. Almost a commercial bank, cooperative bank, they need to balance everything properly. And give power to RBI to approve the appointment and reappointment and removal of chairman, director and officer of the bank. In the banking system, in the individual bank, there are proper hierarchy which is starting from the chairman, the appointment of chairman, the appointment of director, the board which is completely appointed. So even the RBI, this act is a complete power. In case the chairman they want to remove, if they want to remove for the director because they are not following the guidelines set by the RBI or according to the Banking Regulation Act, they are not carry their operation, then they have a complete power to remove their chairman, director and the officer. The safeguard to the interest of depositor, because the major source of finance, the major source of deposit expected from the customers. So the depositor, those who are opening an account, of course they want to save. So this act is completely giving a safeguard to the investors or depositor. So that is a major objective here. And the facilitate strengthening the banking system of country, the complete banking system. So which is coming under the service sector, no doubt. So if of course the strengthening means actually the banking operation, if they're running very smoothly, the economic contribution, the GDP or per capita income, of course the overall economical growth we are able to identify. Moving forward. So here the next agenda which is related to banking sector reform. So under banking system there are too many acts which is dealing for the separate entity. So here, the actually first act is Society Registration Act. So which is completely the society based on the finance support, the financial product, the society how it is registered in the year of 1860. This any society they want to register under the Act of 1860. So this act allows 7 or more people to related to literary, scientific and charitable purpose. For the form of society or association, the group of voluntary people, they join together, they are opening in one specific association. So if they want to open any association which is for running the activity, so they want to register under the Act of 1860, Society Registration Act. Okay, it is a promote formal organization in our country. So like this, there are different types of society we can identify, which is an association or the group of people they started. And the next instrument, which is completely the banking related product, what we call it as the Negotiable Instrument Act. So this act is passed on the 1881. This act is define and amend the law related to the negotiable instruments like promissory note, bills of exchange and check. You know, you got more clarity about the negotiable instrument, which is always having a liquidity position. Okay, the cash. Next, the third one is Indian Trust Act. Okay, here if anybody want to start a trust, of course they want to register under this act, Indian Charitable Trust, you can say charitable trust or any specific trust. So the act is passed 1882. So this act helped to recognize what the trust, the complete trust. There are different members we identify. We call it as a trustee. So here, who is a legal trustee by law, and give a proper definition for them. So if the trust, those who are coming under the trust, there are many trustee we can identify. So on behalf of the many of them, we are trying to identify there is one or two are legally trustee. And next, which is the Bankers Book Evidence Act, because the banking also, which is coming under the Banking Regulation Act, of course, they want to maintain the day-to-day transaction, what and all the asset related, liability related, and the capital part, everything they want to maintain a proper record. So that's what they want to go for. In the year of 1891, this act is passed. Okay, so just for evidence. This act allows the bankers to use their ledger and books of evidence to show their clear record, because every transaction, the complete accounting information they want to disclose. So that's what they want to follow this act. And the Indian Stamp Act, because we know in Indian there are too many activity or transaction buying and selling. So completely based on the stamp or registration what we did. So when we are going for the Indian Stamp Act, which is always whenever you are trying to generate any document, so you need to use the stamp paper or registration process. So what and all which is related to the Stamp Act. So which is passed on the 1899. This act is related to introducing and amending law related to stamp duty and registration. Even the bankers, when they are lending a loan to the bank, needy people or customers, okay, so they try to go for hypothesis or registration, okay. And the next one, cooperative society. We know just we got a clarity about the Banking Regulation Act 1949. So which is involved commercial bank as well as cooperative bank. So under cooperative society, if any association become a cooperative society, they must compulsory, they want to register under the Cooperative Society Act 1912. So here, this act consolidate and amend the law related to the democratic and smooth functioning of the registered cooperative society. There are those who want to start a cooperative society, which is also one kind of organization. So the cooperative society, if they want to start cooperative society, they must go for the Cooperative Society Act. Next one, Provident Fund Act. So under any banking operation or any organization, minimum employees, if they're working, of course they want to make a compulsory provident fund or pension scheme. Okay. So this act is introduced in the year of 1925. So this act make mandatory to provide pensions and provident fund to employee of different organizations. So here there are, if anybody started any organization, they are not alone. So they are depending on the number of employees. Of course, the minimum employee, the limit, if they reach, definitely they want to go for making a compulsory provisions for the mandatory provident fund as well as pension fund. So Indian Partnership Act. So any partners they want to start either any person they want to start a partnership firm. At least there are 2 person become a partners in case of banking or individual. So banking there is a limit for 50 or 200. Okay, so under any Partnership Act 1935, which is introduced in the year of 1932-35. So this act clearly clarify the definition of partnership. We know the meaning of partners. So if the partners are ready to, they are agreed to share the profit and loss based on the partnership deed what they signed. So again, the partners, they want to show their interest following the act which is related to Indian Partnership Act 1935. So 2 or more person who share the profit of the profit or loss business run by the run by all or by one person only. Okay, there are different types of classification of partner: active partner, sleeping partner, nominal partner. Okay, so there are different types. Who is taking a responsibility for your business? Next one, the Reserve Bank of India Act, very compulsory because which is directly or indirectly related to the banking operation. The Reserve Bank of India, which is a central bank, so the act is passed in the year of 1934. So any cooperative bank or any commercial bank which is directly coming under the RBI, because the RBI is monitoring or regulating, okay, so completely supervising. So this act lead down to the formation of the Reserve Bank of India 1935. Okay, because you have to, as a individual banking, they must compulsory want to follow the guidelines, rules and regulations set by the RBI. So next, Insurance Act, because the majority of the insurance which is coming under the service sector, so even the banking sector is also providing a lot of insurance product which is coming under financial products. So the Insurance Act 1938, this act regulate the insurance sectors and provide a legal framework to the monetary industry framework, because the insurance also which is related to the finance, which is related to the financial product, we can call it, we can directly say. Moving forward, next under Narasimha Committee Report 1991, which is because any development will be taking care if it is followed the complete report what they are trying to go for. So under the lead of Narasimha Committee report, the first report in the year of 1991. So because we need to find out the evaluation of bank, how it is fastly developing, if any measurement actions are taken, okay, how they implemented, the planning is completely depend on the report. Okay, so here to promote the healthy development of the financial sector, Narasimha Committee made some recommendation using some parameters or criteria or fast operation or historical operation from the banking sector, because if you are finding a lot of rapid changes we are identified, so those factors what and all the recommendation is provided by Narasimha Committee, which is almost implemented. So a recommendation of Narasimha Committee, first one, the establishment of 4-tier hierarchy of banking structure, because the banking operation also operating based on the hierarchy system. So the hierarchy, the 4-tier hierarchy of banking system with 3 to 4 large bank. So any recommendation or any plan or any implementation, of course you need to select a leader. From the top they are selected for SBI, from the bottom they try to select a rural bank. So because both their operation are same, so that's what the rural bank, which is targeting for only for agriculture, because which is located in the rural area, so agriculture. And the second one, the supervisory functions over a bank, because the bank is completely regulated or supervised or controlled or monitored by RBI. So that's what the supervisory function is, the main functions of RBI. Over the financial institution can be assigned to quasi-autonomous body sponsored by RBI. Now RBI is sponsored for, there is separate bodies they frame, okay, just for supervising the activity of banking related. And next one, a phase of reduction in the statutory liquidity ratio, because this ratio is coming again and again under banking operation, because the individual bank, they are maintaining a, because whatever they collected deposit from the depositor or customer, so from the small portion which will go for RBI as the cash reserve ratio, the rest of the amount which is coming under the banking control, so which is call it as a statutory liquidity ratio. So here the reductions level, what reductions level? The phase of achievement of 8% of capital adequacy ratio. The capital adequacy ratio means what? So which is a highly risk or weighted asset. So risk based they are maintaining the capital. And abolish branch licensing policy, because nowadays each and every area we are we know there are different, the same banking operation, the same banking system, they are going to establish a different branch. Whenever they try to go for establishing a new branch in the new area, they want to take the license. The license is completely removed, so that is the abolish of license. Okay, and the proper classification of asset. So because under banking sector there are different types of assets, so they want to properly classify collateral asset or mortgage related or land property. So the complete classification, so according to the Narasimha committee, they suggested. So the proper classification asset and full disclosure of account of bank and financial institution. The financial information, what and all, it's for the internal and external, they want to disclose, because the real investor, the real depositor, they want to get to know. Okay, and deregulation of interest rate, the regulation which is completely controlled, taken care by the RBI. So when you are going for the deregulation, so the individual bank, they have a freedom to set a rate of interest. So then also they must follow the guidelines set by the RBI. And the delegation of direct lending activity to IDBI, to the separate cooperative body, because the responsibility how they are giving delegating. So here the delegating or direct lending, because whatever the industry or agriculture, whenever they are trying to go for approaching a loan for the any financial institution, so the limit whatever the fixed by RBI, apart from the limit, whenever they are getting an application, so the specific application will forward it to RBI. So that's what here we can find out the delegation, complete the freedom. Okay, and the next one, Narasimha committee report 1, the major what and all we identify here. So the banking reform measures of government, there are different acts which is related to the banking sector. On the recommendation of Narasimha committee, following measures were undertaken by the government since 1991. Because the Narasimha committee, with the help of a number of members, so Narasimha is taken leadership. Okay, so they recommended too many opinion what they collected. Okay, so one is lowering SLR and CRR, statutory liquidity ratio, which is individual bank are maintaining, so which is a reduce. Okay, and the CRR, even the individual bank, whenever they collected deposited from the individual customers, so the final customer after collecting a deposit, for example the 10 crores they collected, for example 10 crores they collected, so from the 10 crores they want to, individual bank they want to maintain, for example 80%, means around somewhere they want to maintain remaining 20% they want to deposit in the RBI for the CRR. Okay, so here what is the ratio which is completely reduced? Maybe 80% can be reduced for increase for 90, and CRR can decrease for 15. So like this, which is, and Prudential norm, which is completely based on the which is financial related capital formation. The norms is set followed. Okay, and the capital adequacy norms, because the individual bank they know the risk weighted capital, the risk weighted asset, what and all which is connected for your banking operation. So the norms which is related to capital adequacy ratio, or we can say CRAR. Okay, capital to risk asset ratio. And deregulation of interest rate, because the regulation, if the RBI or any central bank, if are not taking a direct regulation, they are not controlling or monitoring, so the complete individual banking authority, banking, so they have a freedom. And the recovery of debt, because we know debt is nothing but your long-term debenture or long-term loan, so the recovery part. Again, the competition of a new private sector bank, because here the banking, public banks as well as private bank, majority the private bank also contributing for the nation. Okay, and the access to capital market, even the bank or they are trying to go for accessing a dealing with the capital market like money market, share market, and the freedom of operation, because the individual bank they want to get freedom, full freedom. So if somebody is controlling, so they cannot work very smooth. So that's what a local area bank, individual local bank are increasing, and the supervision of a commercial bank under the supervision, RBI are supervising the activity for commercial activity. Keep on watch for next session. Thank you.